Hey, good afternoon, everyone. David with Kingdom Minded Trading. Today's Market Insights report. So we're doing our top-down analysis. We do that at the end of each market session and at the end of each week. So right now on the daily basis, this is the daily recap of the market action. At the end of each week, we look at the weekly candles, but on the daily candles, we're looking at the 3-month chart and we're looking at the 1-day candlesticks. Each of these red and green icons, for lack of a better word, is a candlestick. Japanese candlesticks were used in the 1700s to trade rice in Japan. So, real quickly, let's take a look at the major indexes. First of all, the composite was down on the day, down by 0.26%. That's a red candle. That's a bearish candle. Which is that's a bearish indication. We had a high here on October 28th when the index closed at 23,827. We came down here. We had a pullback of 5, 6, 7, 8 days. Then it bounced. Technically, it was a higher low, but not by much. Over here, this low on this large green candle was higher than the low over here on October 22nd. It bounced up. Yesterday paused, and then today is a bearish candle. So it may continue up tomorrow. It may not. It might come back and make a lower low, and if it does, then the trend, at least in the short term, will have reversed to the downside. So we'll see what happens. Still above the 30-day moving average. So overall, we're in a 3-month uptrend on this, but on the short term, it's weak. Taking a look at the Dow, very strong index that broke out of horizontal resistance. This was a high close we had over here back on October 27th at 475.45. Went above that, but did not close above that until yesterday, and then today continued higher. So there is some action. This upper line is what we call the wick. The top represents the high of the day. The fact that it's green means that it closed higher than where it opened on the day. So it closed at the top of that green body. This is the body of the candle, the open and the close. So it's showing some resistance up there, but was up 0.68% today. So strong index. Nasdaq 100, very similar to the composite. It's above the 30, but same exact chart. Russell 2000, that's weaker. Not only has that made a lower high, but it's not able to break above the 30-day moving average. So we'll have to see what happens. It might pull back down here and bounce off of this horizontal support area in the 2390 area. And it might not. It might break lower. So if it does, that'll be a reversal to the downtrend. But still, it is on a three-month uptrend. So that's weaker. Semiconductors, if we're looking at technology, this is stronger than the other two, than the composite and the Nasdaq 100. So semiconductors stocks are a little bit stronger. There is a potential for a continuation to the upside. If we draw this line, a breakout and a close above this line would be a horizontal breakout. But we'll have to see. It's above the 30, but obviously having a little challenge probably with the overall market. S&P 500, it was up on the day, 0.06%, but it's showing some resistance. So it doesn't mean it's going to pull back. It is above the 30. It is a strong 3-month trend, but we need to see a breakout here. Otherwise, we might come back and test. And, if it does pull lower, then what we're seeing here, number one is we had a low here on October 22nd of 66.55.69. It made that high after that and then pulled back here and it made a lower low. And then it's gone up and possibly made a lower high. So that's not a good sign. So we'll have to see what happens. It could bounce and just go sideways for a while, or it could reverse, take a 2 to 4 week correction, which honestly would be healthy for the market. But we'll have to see. And then we always look at the VIX, and I mentioned this in one of my recordings recently. This is now trending up. So if you look at what it's doing, the high here, the high close on this candle back on October 22nd was 1860. Okay, it broke out above that and it closed at 1950 on November 6th. And now we're on a pullback. But the bottom line is this candle right there, that's a bullish candle. And it's a higher low than the lows over here. So now we're trending up in the short term, still below the 30-day moving average. That's a good thing. But the bottom line is if this moves up, we're going to see the market pull back. That's just how it works. And so those are the indexes. Like I said, 3-month uptrend, but definitely, we might see a little bit of a pullback. We'll just have to see how it plays out. Sectors, we're on a 3-month downtrend on basic materials, but it was strong today. Communications, we made a lower low here. If you look at the lows over here, it went up, went above the 30, pulled all the way back, lower low, and potentially a lower high right now. So, but technically up slightly on the 3 months. Energy stocks, relatively strong, but showing some weakness in the 92 area. So we'll see what happens here. If we pull back and get a bounce above this moving average and a bounce and above this low, then that's a good sign. So energy is looking fairly well. Financials, a lot of resistance up here, but it's one of the stronger indexes or sectors today. Industrial stocks, obviously showing some resistance with that large upper wick, reached higher, but couldn't close up there. So we'll see how that plays out. Technology, obviously that's what we've been doing, what's been the strongest. And, again, it's above the 30, that's positive, and it did fill on this bull flag setup from a few days ago, but it's not been able to follow through to the upside yet. It doesn't mean it won't, it just might. Consumer staples on a downtrend on the 3-month and resistance today at the 30 days. So, consumer staples are stocks that do well when the economy is not doing well. It's, staples are drugs, food, things people need to have no matter what the economy is doing. Real estate weak overall, not too exciting. Utilities, it's a strong sector overall, but on an extended pullback for at least a couple weeks here, still below the 30. So we'll see how it plays out. Healthcare, strongest sector by far right now. It's stronger than any other sector. It's taken over. So there's obviously rotation into this sector. So that means we can look for opportunities within the healthcare sector and take advantage of those. Last is consumer discretionary, sideways trading range. Not too excited about that right now. So overall, we're still uptrending, but we have to be very selective if we're trading stocks. Futures, I've been highlighting gold and silver, and gold is back on the move up. And, we'll see what happens. But, we've got some targets up there at the 4,400 area. This is what we call the swing target. Those are the last highs. And this is forming actually that looks like it could be forming what's called a cup and handle, which is a bullish pattern. Doesn't surprise me at all. I would expect money to keep or continue to going into gold and silver. Silver, big move today, horizontal breakout. One of my members has a trade on this. We bought the February call options. So he's doing fairly well on this, and we still have a breakout target of $61. It's at 54, so that's a 7-point move from here. But he got down here in this area, so he's pretty happy with that right now. And there's more money to be made on that. And then, last but not least, we're going to look at the largest Nasdaq 100 stocks that are non-financials. Nasdaq 100 are non-financial stocks. They're the largest stocks in the composite index that are non-financial. So Apple, been very strong, but it's at resistance. It is a higher high yesterday, so, because the previous closes were lower than that. So that's still bullish. Amazon made a nice gap up there, pulled back and tested, got filled on a bull flag setup a few days ago. Yesterday was a higher close. Today's a pullback. So we'll see what it does from here. It might come back down and test the support area again. A lot of it has to do with the market overall. Google, new high yesterday, pulling back a little bit today. Meta, 3-month downtrend. Microsoft, weak, 3-month downtrend. Nvidia, one of the stronger stocks, still a bull flag setup, still holding support at the 30. So there is actually a setup on that. If somebody wanted to place an entry, you could do that. And we'll be showing people through our trading service. We'll be doing real-time trade setups, and we'll be placing conditional orders. Tesla, I like this stock once it breaks out, but it's consolidating sideways right now and below the 30. Once it does break out, though, there's a lot of upside. So if you look at it like this, if it breaks out of 471, your target on the upside is 530 for the breakout target. That's basically the measurement of this high back on October 2nd down to this low on October 10th. If you take that distance and you add it to where it breaks out of, that's how we get that breakout target. So it's basically a $60 potential move on a $471 stock. That's 15%. That's a nice move on a stock, and that could happen within a couple months, or so. But honestly, I don't see why anyone would want to trade stock. I mean, the bottom line is it takes a lot more capital. If you want to buy 100 shares on this at $470, you're going to pay 471, let's add a couple zeros to that, $47,100 for 100 shares of stock. When you could instead go out here and you could buy an option contract. It's got a potential of a 55, let's say January 16th, a $72 potential move on that. And you could buy right now it's at $430. So if you went to the 430, you could pay $4,000 and buy one option contract, which controls 100 shares of stock. So if Tesla theoretically went to zero, you could lose $47,000 on 100 shares. If this went to zero, if it goes to zero and you own the option contract, you lost $4,000. So, that's in the worst case scenario, but a lot of people are afraid of options, but they actually give you leverage and they allow you to use your capital in a more efficient manner. So you just have to know when you buy options what your time frame is for the target, buy more than enough time, and then obviously have stops and targets in place. But the nice thing about an option is you can never lose more than what you pay for it. So those are the Magnificent Seven, and then there's other watch lists. I have this as my primary watch list. So we're not going to get into that now, but hopefully that helps in some way if you have an interest in learning how you can, use a small amount of capital and make nice rates of return. That's what we're doing with my trading education service. We launched it last week. And we're building out a complete website, but you can get started right now and you can, invest as much time or as little time as you want and take advantage of real-time trade setups and get, nice, decent rates of return. So in any event, I appreciate y'all. God bless. Have a great day.